Does that not force companies like General Motors just down the robotics curve, the robotics and AI curve, just because that is going to be the labor arbitrage of the future?
Yeah, very much so. We're doing a lot of work in that area today. The great thing about robots is they don't take coffee breaks and they don't get sick, and they can work 24 hours a day as long as you plug them in and you charge them back up. So
Bitcoinzilla stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoinzilla today and enjoy the new edge. In this video, Raoul Pal and Mark Holowesko reveal critical insights into what could spark a U.S. market drop and pinpoint exciting investment opportunities stateside. Don't miss out. Let's catch them to discover more.
absolutely. You look at the amount of robots now in Amazon's operations.
There's more than people, I think, now.
I don't remember the exact number, but I think it's like 700,000 or something ridiculous. And the cost of those robots and the productivity of them are quite high. So yes, I would agree with that statement.
And do those manufacturing businesses like robotics, do they offer value opportunities because they're more manufacturing based, they have a higher cost of capital, they're difficult businesses, than a typical SaaS style business that was the growth model? Do you find there's more opportunity in being able to leverage into this side of the equation?
A lot of the companies in robotics have dominant market shares. And so I can't name companies for different reasons, but there's a company that manufactures the joints for robotics. They have massive market share, and there are different ways of playing the robotics introduction in manufacturing. You don't always have to buy the companies manufacturing the machinery, but some of the component manufacturers that have dominant market share. So they tend to have very high cost of capital. You have to put a lot of capital in place to produce robotics. And the companies do have great market share, so they have generally good pricing power as well.
And what about the energy side of that equation as well? So that's the other big thing. If you go down to Houston now, everybody's realizing that data centers plus robotics, the whole thing is a energy renaissance is needed, and not just in oil and gas, but across everything.
100%. And, you could look at different ways of investing in that. I think the best way to invest in that is through natural gas. That's the sort of area we've been looking at. A lot of the more direct plays on that, some of the nuclear stocks, they've all run. But yes, there's generally when you look at data centers, when you look at the movement to electric vehicles, which although it's slowed down, it's still going to maintain a certain pace. The electrification needs in the United States are massive, and you have an aging electrification base. So there's a big need for that. But from our perspective, I think the best way to play that is by looking at the natural gas sector. There's some really interesting. That's the area that really has to expand and can expand quickly and doesn't have some of the environmental problems of oil and coal. So natural gas is a great way to play that need for electrification, I believe.
Today in crypto, industry experts urged U.S. regulators to prioritize stablecoin clarity and smoother banking relationships before pursuing tax reforms, emphasizing that resolving these foundational issues could unlock significant industry growth. Matten Erder of blockchain network Orbs highlighted the Trump administration's positive stance toward crypto, underscored by Trump's recent executive order establishing a national Bitcoin reserve from seized crypto assets. Meanwhile, Ethereum co-founder Vitalik Buterin became the talk of crypto Twitter after a quirky video went viral, showing him kneeling before a robot and playfully letting out a meow. The amusing moment sparked widespread speculation, humor, and optimism about Ethereum's future among crypto enthusiasts. In other news, prediction market Kalshi made headlines by suing gaming regulators in Nevada and New Jersey, following cease and desist orders that halted its event-based contracts. Kalshi argues its platform, regulated federally by the Commodity Futures Trading Commission, CFTC, isn't traditional gambling, thus challenging state regulators' jurisdiction, potentially reshaping the landscape for crypto derivatives regulation.
Isn't it a bizarre world that a friend of ours is now running the Treasury?
I know. He was at our conference last year, and very interesting guy. Very interesting guy.
Yeah, I mean, because he's had a place in Life and Key for a long time. I mean,
Yeah.
in my house in Spain, he's a global macro investor subscribed for a long time, and we were all in the same industry together. But what's interesting, what Scott talks about, is this desire to lower the cost of energy in the United States.
Yeah.
And I wonder how that plays out, in terms of who gets the margin, how does it work? We're not yet at the cost of production of the shale, but if you start breaking $60, it starts to become a problem again. I always find it a very difficult market, energy, to capture value.
Yes and no. I mean, I saw a graph yesterday that looked at dividends plus share buybacks in the United States by sector. And the sector that has the largest dividend plus share buyback by far is the energy sector. It's 7%. I think the next largest one was communications. Most of the other sectors were almost half that level. So a lot of energy stocks in America haven't really expanded capacity and haven't really spent the CapEx that they need to put the capacity in place to meet this future demand for oil and gas because of some of the regulations that have been in place up till now. And as a result of that, they've been generating huge amounts of free cash flow. And they've been returning a lot of that free cash flow to shareholders in terms of dividends and share buybacks. So I actually would disagree a bit. I think there are some really interesting energy plays because they're giving that cash back to you as shareholders. But in terms of Scott, the new Treasury Secretary, I think the only way they're going to get energy costs down is by allowing companies to drill, this drill, baby, drill, and also expanding the usage of natural gas. I mean, it's the quickest way of meeting your energy needs is through natural gas. So I think that's an interesting way to play it. Another interesting thing about Scott, if you go back and read some of his old letters before he became Treasury Secretary, I kind of feel that it's better, according to what I read in some of his letters, to let the dollar weaken than to put tariffs on everything.
That's right.
And I think this idea that the dollar is going to be super strong and the U.S. administration wants a strong dollar, I don't agree with that. I think the dollar is certainly overvalued. The dollar is being driven by differential in yields around the world. Those yields differentials are narrowing. And I actually think Scott and the U.S. government would be very happy for the dollar weaken. That would take some of the pressure off of some of the manufacturing base in the United States. And so I think that's probably one of the things in the marketplace that's misplaced. And I think Scott would be very happy to see the dollar weaken.
Bitcoin traders are buzzing as $65,000 price targets pile up amid recent volatility, driven notably by the mysterious player dubbed Spoofy the Whale, who has aggressively bought recent dips. BTC experienced 10-day lows around $81,600 over the weekend, but swiftly rebounded toward $83,000, retracing most losses ahead of Monday's market open. Popular analyst Don Crypto Trades remarked on this volatility, suggesting Bitcoin might avoid creating another CME futures gap, setting the stage for a pivotal week ahead. Yet, caution persists. Veteran trader Peter Brand remains skeptical, identifying a bearish wedge pattern signaling potential further declines toward the $65,635 mark. Meanwhile, Keith Allen from Material Indicators highlights intriguing market moves by Spoofy, suspecting the whale of strategically suppressing prices to accumulate Bitcoin at lower levels, notably placing substantial bids down to $78,000. Allen views this whale's buying strategy optimistically, implying long-term confidence despite the short-term bearish sentiment gripping traders. Bitcoin and Ethereum ETF showed starkly contrasting capital flow patterns this past week, according to the latest insights from ad-driven analysis platform Spot on Chain. After 10 consecutive days of consistent inflows, Bitcoin ETF abruptly halted their positive momentum, signaling caution among investors. Conversely, Ethereum ETF broke a 3-day streak of outflows, raising optimism about renewed investor confidence in Ethereum. Despite these mixed ETF trends, Bitcoin's price still gained a healthy 7.5%, demonstrating underlying market strength, although recent pullbacks indicate some investor hesitation. Ethereum, meanwhile, surged 10.5% over the same period, recovering somewhat from a prolonged bearish trend. Yet, Ethereum remains over 55% below its November peak of $4,109, currently trading around $1,834. Historically, Bitcoin has significantly benefited from institutional adoption following ETF launches, evident from its impressive 185% surge after SEC approval in 2024. Ethereum's ETF approval has not yet produced similar momentum. However, the latest reversal of ETF flows toward Ethereum could reignite optimism among investors, signaling potential upside ahead. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.